You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to the show.
Glad to be here, Jim.
So, what's going on the stock markets right now?
Well, we had end-of-the-month window dressing, and on top of that, we had some big companies come out with earnings reports, some good, some bad, but into the close today, Amazon was up on positive news and comments, along with Apple Computer. So, you're getting a lot of end-of-the-market positives here, but at the same time, the market itself had been overbought. And we actually went short a couple of days ago. We were thinking we needed a pullback, and we start to see some of that today. A little bit, I guess you could say, offset by the post-market moves in like Amazon and Apple. But market was extended, and, part of it was because of the anticipation of high-tech positive earnings from these big-name companies. But like anything else, the force of gravity ultimately comes in, and we just had too big of a surge here. We had, looking at charts, you had a gap to the upside that technically needs to be fulfilled and should be fulfilled. And, we're in that seasonal time frame where historically, any lows you see in October, or even in September, ultimately result in a year-end rally. The offset negative, of course, if you got this government shutdown in the U.S., and the market just seems to discount that completely. At some point, it might have to come to the realization that it has some significance, and maybe there could be more of a downside surprise. We're just going to have to watch the tape here a little bit after this end-of-the-month window dressing and November starts, and we'll see how the market interprets it. But my overall model for the year was positive. As I mentioned, I still was looking for higher prices. A theoretical number I came up with several months ago was around the 7,500 level in the S&P, and we're around the 6,900 level. So we still had we have some room here. We can always adjust those numbers. So, and then of course, a lot of good news from Donald Trump in the Far East, negotiating with Cambodia and Thailand and China and so forth. And appears that maybe some of the unsettling news with regard to rare earths and so forth might be put on the back burner a little bit. And that helps, the technology stocks because, they're concerned if they can't get the rare materials or rare earths or the manufacturers can't get that, it could impede, technological, production. So I guess that's sort of good news. So except for the government shutdown and, I guess the other story, I'm just thinking out loud here, of course, is, you had a little bit of a Halloween trick or treat here on the part of the Federal Reserve yesterday, indicating that, you might not get that next quarter point interest rate cut that everybody was counting on in December. So the market didn't like that and started to pull back. And, with the government shutdown, even though I'm not much of a believer in any of the government statistics, many have, they haven't been reported, and obviously others believe it and use it. So that may have been part of the reason why the Fed, decided not to go and commit to the possibility of another quarter point rate cut. And of course, I'm a bit skeptical about the whole process anyway, because there's so much more to the story than just a Fed funds rate cut. What is the bond market doing? Treasury bond market had been rallying for a little bit and then started to pull back in the last day or so. So the concern about inflation and what the real story out there is still questionable, and everybody's hoping that we do see at least 30-year bonds start to rally, which means long rates would come down, and that would help mortgages and so forth. So it's a little bit of a crazy time, but I think ultimately, I think you will see bonds, rally further. And, when you think about it out loud, the government shutdown is sort of good in one sense. I mean, if less people are working and money's not being spent, that can help potentially cool inflation a little bit, I suppose. The prior U.S. presidential administration, goosed up the job numbers by hiring a lot of government employees, sort of distorted the employment numbers. And now that Trump is in there, and we're getting more real about what expenditures are really needed on the employment side as part of the government, that sort of changes that a little bit. And so it's really sort of up in the air. I wonder how this whole shutdown is going to unfold. I mean, it's really unfortunate, and we get into a lot of political discussion, but ultimately the Democrats are holding up the process because they want to see immigrants get health care coverage, among other things, which is not what the current popular vote indicated was necessary. So they're sort of fighting, the consensus about what we should be doing about immigration and who should be getting benefits and so forth. And, unfortunately they're on the wrong side of the political spectrum right now and could backfire on them in the big picture. But how it's all going to play out here short term is going to be real interesting. And again, as I mentioned, will that suddenly affect the stock market in a little more bearish way than I would normally expect? Or is the market just ignoring it, thinking that, as it has up to this point, that it's all going to be resolved favorably, and it really doesn't have that much meaning? I guess we'll know more now, as November unfolds and we get past all these earnings reports.
Nvidia hitting a $5 trillion valuation. Can that valuation hold up?
I'm a little bit of contrarian and a skeptic about markets and period. That's just sort of my nature, being a trader and having done this for 45 years. I mean, unfortunately, Nvidia is sort of the tail wagging the dog, and now they're investing billions of dollars in other tech companies or AI-related companies, and in a way they're sort of manipulating the markets because of their strong cash position. And then you just mentioned that there's a $4 trillion valuation. So, they're out there, it's sort of a self-fulfilling prophecy. Their stock is up, and they're using their money to support others in the ancillary AI chip industry, and it's sort of, just increasing the size of the bubble a little bit. So it makes me a bit skeptical. And frankly, looking at the charts, the number that I came up with was about 214 target, and Nvidia got to 206, 207, and it's getting pretty close to an important trading objective. So I think it's overdone, honestly, and I think it could backfire as too much money is being spent on the AI speculation. And it's like the story with the nuclear expenditures. A lot of the money being spent is not going to come to fruition for, possibly a couple years. And the stocks are anticipating things that are not really happening yet, so to speak. So I'm a little nervous about that $4 trillion, and then the fact that it's even there, and the fact that they're spending money self-supporting the industry with that capital, and doesn't mean it's not tradable. I just think we're closer to a top in it, honestly. I just think it's way overdone.
Amazon says it's going to lay off 600,000 people over the next couple of years and replace everybody with robots or AI technology. Could that trigger a recession, just losing that many jobs?
Well, the stock is up about 30 points in post-market today, on their earnings report. So, and part and parcel to that, of course, was the layoffs. We have to look at it in two different ways, the economy, people's lives, and the stock market. We're looking at the stock market, which is in its own world, unfortunately, relative to the average person and what's happening in the real time, in their real-time lives. So, I don't know. A lot of companies have laid off people. The stock market interpreted it positively because they're cutting costs. Getting off on a tangent a little bit, a big company like UPS, the shipper, is laying off some thousands of people because the shipping industry is, not apparently as strong as it should be. And the transportation average, I followed Dow transportation average, and that's been underperforming the overall market. And that's usually sort of a bearish sign. If people aren't shipping and delivering and so forth, does that mean business is really slowing down? or what, and historically that has been the case. So, but meanwhile, they cut jobs back at UPS, so the stock's way down. It did experience a rally on that story. So the market seems to like the fact that people are being fired because of the reduction of costs on the part of the company, irrespective of how it affects the lives of those people. So the stock market is a cold, calculating, cynical creature, and it does its own thing and thinks in its own way. And, you just have to sort of just decide what you're looking at. Are you looking at, what the future is for AI and jobs among people, or are we looking at how the stock market or your individual stocks perform as a result of those decisions? And unfortunately, the markets, the many decades that I've been doing this, you're in your own world when you're in the stock market. The real world could be going to hell, so to speak, but your stocks are up, or you're in the right stocks that are moving up, or you're calling the market in the right direction. And what happens with employment and the economy, really is irrelevant if you're trading the stock market correctly, or if you're trading in the right direction, or you're in the right stocks. So it's sort of a difficult way to answer your question, how all this is going to impact the world, and whether we're going to end up having a bunch of robots out there and you're not going to need the people. These people, are they going to find other careers, other jobs? Are they going to find careers in the AI industry itself? And how are the companies that are making these decisions performing in terms of profitability and stock performance? So you have to look at it both ways. And sort of fortunately or unfortunately, I'm on the stock market side because that's what I track and follow. And though I'm concerned and compassionate about what happens to individual jobs and people and so forth, ultimately we're trading stocks and we're trying to be have the right timing and be in the right situations and be in the right direction with the market at the right time. So big question mark, Jim, how it's all going to play out with job layoffs and robots.
Yeah, you come to the point, the robots are making these goods, but if people don't have jobs and money, who's going to buy the goods?
It could get to that too. But then again, you've got, Tesla, which, everybody has viewed up to this point as a car company, and now it's been involved into more of the world of robots. And that's what Elon Musk is talking about. And the future of Tesla, by example, will be, for example, in the robotics industry, or creating all these robots, as much as I guess he was creating automobiles up to this point. So many of the analysts are thinking, well, you got to think of Tesla as a robot company. So obviously a lot of big companies are going to be buying these robots, and other, that's going to help productivity and so forth. And, I guess the people that are laid off are going to have to find space in the robotic industry itself, or AI, or retrain for some other new technology that we haven't heard of yet. Of course, we're supposedly going to Mars, and there's going to be a lot of stuff with aerospace and rocketry and that type of thing, and satellites, and there's a lot of areas that are growing, and there's going to be a lot of opportunity for people to get into jobs and train themselves for the new industries that are opening up. And in fact, that's been going on the last couple of decades. When you think about it, I mean, people have been retrained into programming, into blockchain technology, for example, into crypto, and all these kind of things, adjusting to the new technologies that, opportunities that unfold. So I think the same thing will continue, and I guess the vocational schools or the colleges are going to start training people for the new industries that are going to open up. And, it could be a big boom, Maybe the people that get laid off are going to end up getting hired in the robotics industry and make more money doing that than they would have, prior to that happening. It just have to follow the news and see what job demands the new industries that we see out there are creating. So you can't assume that the robotics or AI is going to create economic disaster. It may indeed just open up more opportunity and more jobs.
Or maybe you buy a robot and rent it out.
Good idea. It could be like a piece of property instead of renting a house and generating income by robots. And good idea.
You buy a robot and rent it out to do your work.
That'd be great. I'd love to. I definitely like one for me. That would be great. Help me take care of my dogs and feed my dogs and walk my dogs and do some of my computer work, and it'd be great for me.
And would your dogs be more loyal to your robot than they are to you?
That's right. They'll be looking to the robot for their dinner, not to their master, because he'll be feeding them. Correct.
We'll have more with Mark Leibovit right after this. The real Mark Leibovit.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, what's going on with cryptocurrencies?
Well, it's been hitting a little bit of a corrective phase here. The last couple of weeks we've been talking about that. Just in August, we saw the Bitcoin, surge up to that 126,000 level, and it's been sort of choppy to down since. It's been holding the 104, 105,000 level and so forth, but we're in this, little corrective phase. Other cryptos have, underperformed as well. At some point we're going to get a big shakeout. We've seen it over the last, 12, 13 years in Bitcoin, where it runs up big and then they kill it and it comes back 2 years later. I mean, that's always the risk in this market. But we also have a lot of legislation that's still pending out there. And my original thinking about all that, we've discussed this before, is that a lot of the big moves could be later next year, not necessarily all in 2025. And you could go through a corrective period. So, you got to decide, are you an investor, which you should be for a portion of your portfolio, just as you would be in gold or anything else, I suppose, for diversification purposes. But if you're a trader, you have some concerns here, and the charts say we're in a little corrective phase here, and we'll see if we form a little trading bottom here in the next few days, which, the way I'm reading it, looks like could happen, and we could have another pop here into the end of the year. So, we start taking out support levels and so forth, and I would say at Bitcoin, that's probably, if it starts breaking like 98,000 or that type of level, I would get more concerned that a bigger correction is underway. But we have so many positive overall forces at work, the government's and U.S. government's involvement and proposed involvement in the crypto reserve and the Bitcoin reserve, and all the technology that's out there in terms of converting the way we do business, with the stable coins being created with that Stable Coin Act, and big companies like Walmart and others creating these stable coins for doing transactions versus using credit cards and checks. So there's so many fundamental underlying things that are happening that are bullish for the whole industry. It's just a question of short-term timing if you're worrying about the price of a Bitcoin or a Solana or an XRP or any of the Ethereum, all the vehicles that many of the traders that are involved with. But ultimately, all these are being put to use for practical purposes. They're not just speculative vehicles, and they're not just out there or have shown interest on the part of investors because they're just tradable, vehicles for no other purpose. They're the commercial applications for them all, and that ultimately is a big positive for the industry. So, as the expression goes, timing is everything, and we're in a little correction now. And we'll just see if it starts to break down here, or we see a reversal into the end of the year. So I'm leaning a little more positive, but I sort of feel that over the next 12 months or so, there is some risk of a further correction, and we'll see if we get another move up first. But ultimately, taking a 2-3 year or more perspective, I think they're all going to be much higher. So you got to watch the charts and decide what level of participation you want to get involved with.
What's happening with gold?
It seemed to have had a nice little shakeout and correction. It's a tough call because it's up so much. I mean, we sold a lot of our gold related plays, and we got out a little early because I mean, I've been trading this for decades. I mean, I'm sure many of our listeners have as well. I mean, when you buy gold at 300, 500, way back in the 1980s and waiting for years and years for it to finally move, and it hadn't really moved here until the last couple of years. It just, 2015 was it 2015, 2016, you got down to about 1,000, and then it finally started to take off again. So, it depends what your time frame is. I think overall, we're probably still in a big bull market, but short term, we certainly blew off there when we got to the 4,500 or 4,600 level. So I'm not selling the coins in the safe deposit box, but I wouldn't be surprised if we tread sideways or even see a little bit more of a correction for a while since we got so extended. But in terms of new investments, except for extremely short-term trades, I'm not really in that market so much right now. We've had such a big move in the stocks. And I guess if we see new breakouts, new highs, I'll have to rethink my strategy. I'm more in the camp that the best is behind us for a while, and there's going to be another buying opportunity, and maybe lower than where we just pulled back to. So I'm sort of neutral on gold here because I really don't have any big positions, and I think we all have to be grateful who've been in that market, that we saw such a tremendous move over a relatively short period of time when it took so many years and years for it to get here. I mean, you can literally, as I just mentioned, you can be sitting for 20 years for this move, which finally came, and then you're saying, oh, I'm going to buy more up here when you probably should be doing just the opposite. So I'm just watching the tape, and we take more of a trading perspective. So I would say my position is neutral on here, and I'm watching.
What's going on with crude?
Still a little bit of a bear. I have an inverse ETF position on. Still thinking that crude could go lower, maybe testing that $55 level, or maybe even getting into the high 40s. Funny that you mentioned energy. There was a little uptick today in natural gas, little volume coming into the upside there. The thinking about natural gas is, I'm changing the subject on here a little bit, but the thinking is that the nuclear could take a while to get till it gets implemented, and all these nuclear facilities are up and running, supporting the data centers and so forth, and the backup source of power. This is not new news. It's been talked about for a while that natural gas could still be a good source of energy and power out there until all this nuclear stuff really kicks in. So there's a little uptick in natural gas today. I don't know if it's related to that thinking or something, geopolitical happening out there. But my overall opinion on crude oil is still a little bearish. I think, drill, baby, drill that Trump was talking about and so forth. I just think there's going to be a lot of supply out there. And but doesn't mean many of the oil companies still can't make money. They still have the ability to profit, even if crude oil is $50 or $60 a barrel. It doesn't have to be 120 for them to be profitable. So many have shown some positive earnings results here, with crude oil being relatively choppy, between this $50 to $70 range. But I think overall, the big, unless something just dramatic happens geopolitically, and I guess it could happen. There were stories the last couple of days that Putin is testing nuclear weapons, and Trump supposedly made some statements, and this is anecdotal, I'm not sure, I have to confirm all this, that he was threatening to do some nuclear testing. I mean, things sort of blow up in the world, and, things could change for crude oil out of the blue, I suppose. So you always have to watch the news in your charts, but everything being normal, I think crude is, not going up at this time.
Anything happening with uranium?
Well, Cameco, CCJ, exploded to new highs. That's sort of your big indicator. It's a Canadian company, went to, what did it get to, 110 just the day before yesterday? I mean, this was a $30 or $20 stock a year ago. Apparently they own a big piece of Westinghouse Electric, which I was unaware of. And of course, Westinghouse has involved some of the nuclear reactors and stuff that they have produced. So it's not only GE Vernova, which produces reactors along with the solar power and wind power stuff, but and they got CCJ apparently got some big contracts overseas. So you can't be bearish on uranium when one of the leaders like CCJ is making big moves. So apparently there's still big demand or anticipated demand, and you have to remain bullish. So the answer is stay positive.
Anything happening on the geocosmic front?
Well, it's funny you should mention that. There's a lot of strong, as they say, far side solar activity, which is now occurring. So it's on the opposite side of the sun. And you can see some of these on auroras that are being produced if you observe if the sun. But there's a rotation, solar rotation is underway now, and it could turn some of these big sunspots that are on the far side of the sun toward the Earth. So this is what the astronomers are talking about. And why are we worried about that? Well, there's big solar spots facing the Earth. It can cause a lot of, disturbances here on our planet, and we've had historical examples of that. And the other big story out there is that still 3I Atlas, that whatever it is, that comet that's circling the sun, and the speculation, Avi Loeb over at Harvard University, an astrophysicist, the speculation, is this an alien spacecraft because the way it's acting or because of the materials that they're sensing that are on this comet that aren't normal to comets. So it could be just a bunch of distraction. We've seen these stories before, but it's creating some news among those that are tracking the geocosmic out there. So this 3I Atlas story is picking up a lot of press and people following it. So I don't know if we'll ever know for sure, but between the sun and the Atlas story, that's what's new in the geocosmic. And we have a full moon coming up on November 5th, so we can watch next 2, 3, 4 days to see if the market does something into that time frame, because often we get little changes, directions around the full moon, and that's on the 5th. So that's about it on the geocosmic front.
Anything else, Mark, we should be keeping a close eye on?
I'm just watching the markets into November. I still think we're going to see higher prices. And if I was a trader, I like to see a little bit more of a pullback and, play for this hopeful continued year-end rally. And watching carefully what happens on the political front here in the U.S. with this government shutdown to see how it affects or has no effect on what's happening. Just interesting times, a lot of crazy things going on. And we're not even talking about, the Mideast or Ukraine or anything else that's going on out there. But, I was encouraged to see Trump in China meeting with the Chinese President Xi yesterday, and, his peace efforts around the world. So at the moment, I think we have calm seas, so let's see if it continues.
Mark, thank you so much for being on the show.
Thanks for having me. Appreciate the interview.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters. He was speaking to us from Arizona. If you have any questions for Mark or for any of our guests, you can send them to info@housestreet.com. Find us on X @HouseStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.